Hello, and welcome to another episode of the Market Pulse series. My name is Rufas, Markets Analyst at FX Pesa. So today, we'll be looking at the current events that have happened over the day, try to understand the key developments in the market, and try to do some technical analysis to understand where the markets might be headed. So hello, Tiger, and thank you for joining the session. So once you join in, kindly say hi in the live comment section. These will confirm that everything is working just fine. So I'll be starting by focusing on the economic calendar to try and understand the key developments that have happened over the day, especially for the economic calendar. So as you can see, the major event of the day was a series of US economic news. And this series includes one, the retail sales from the US. This came in at 4:30 p.m. So we saw the retail sales dropping by negative 0.8% from the previous reading of an increase of 0.4% in the month of December. So core retail sales also experienced some weakness, dropping by negative 0.6%. And this was a drop from the previous reading, which was an increase of 0.4%. Then we had some contrasting data where we saw some strength in manufacturing. So for Empire State or New York Manufacturing Index, we saw a big jump from the previous reading of negative 43.7. Remember, for this manufacturing index, 0 is the midpoint. Values below 0 indicate contraction of the sector, whereas values above 0 indicate expansion of the sector. So moving from negative 43.7 the previous month all the way up to negative 2.4 shows a very big improvement of manufacturing conditions in the state of New York. Then we had Philadelphia Manufacturing Index. This one was reported at negative 10.6 in December. Then in January, it jumped to a positive number of 5.2. So this shows that manufacturing is picking up pace in the US. And this is a good sign. The economy is expanding as expected. But then on behalf of the Fed, which is the central bank of the US, it has been looking to slow down the economy, slow down manufacturing, slow down the jobs market, and slow down the housing market, as well as the services sector. But then with the economy growing stronger, this tends to be inflationary, because if manufacturing conditions are good, then it means that the companies continue expanding their manufacturing, create new jobs, people end up with more money, and money in the system, see prices higher. So this data is clearly not consistent with what the Fed is expecting. So as a result, we expect that the Fed may continue to tighten policy. By tightening, I mean that the Fed may continue holding interest rates higher for longer, which tends to be positive for the US dollar. So import prices are on the rise, up 0.8% in January. This compared to December, where we had a contraction of import prices by 0.7%, basically shows that things are on the rise. So we know that the US is a net importer. So if import prices are on the rise, then these importers are expected to also raise prices locally within the US, and as a result, create even more inflation. This creates expectation that there's a good chance that the US has entered a stage called stagflation. So try and share this from Investopedia. So if you're very new to stagflation, I'll be sharing a link so you can understand what it is. It's basically sticky inflation that won't just go down. Hello, Ishab. You can see Tina in the house, Agustin, Joseph, and Leonard. Thank you guys for joining. So the next thing we need to observe is the FedWatch tool to see the changes in the expectation for rate cuts in the US. So from the CME 30-day Fed Funds futures, we can see that the probability of a rate hike has moved from 70% at the beginning of the year down to 10.5%. whereas the probability of holding interest rates steady at 5.25%, 5.25% to 5.50% has increased to 89.5%. On the next meeting, which is expected to be happening in May, then the probability of the Fed still holding rates high has increased to 60%. And I remember last week when we were discussing these, the probability for a rate cut in May was over 50%. Now it's down to 6%, whereas the probability for a rate holding at the same level has increased to 60%. So if you now move to June, this is where we have the highest probability of the Fed cutting rates by 25 basis points to 53.3%. So the fact that this has moved all the way to June means that we have quite a number of months, and from an investor perspective, this is sufficient time to invest, let's say, in a 3-month US Treasury and get a good reward. If you look at the US Treasuries, you notice that the short-term bills are having some good returns. So for any investor who is investing in short-term US equities, they're expecting to see some good yields within a very short period of time. So I'm trying to see a full list of this. Yeah, here it is. So if you're investing in a 1-month Treasury bill, the yield is 5.37% per annum. If you are going for 3-month Treasury bill, it's still 5.372, and a 6-month Treasury bill is 5.324%. So this shows that there is an opportunity to still squeeze in some more dollars by simply parking some money in the Fed, getting some good reward out of it. So as a result, the overall impact of this is investors buying more and more of these treasuries, basically making the dollar more scarce. And as a result, we continue seeing a strong dollar growth mode. So if you look at the dollar index and how it has been performing since the beginning of the year, then you notice that it has only gaining value. So if I zoom out, notice that the year started just around this area here. There was a big acceleration on the first week, traded sideways for a while, pulled back, and then continued with this rally. So, sorry, this is USD JPY. So for dollar index, this is how it looks like. So at the beginning of the year, it was right here, a rally, sideways for a while, broke towards the upper side, sideways for a while, broke to the upper side, sideways for a while, and then a rally that happened on Tuesday after the CPI news. So since yesterday, we have seen the dollar index weakening or taking some steps back. So today, after the retail sales news, there was a big spike downwards, but that big spike did not hold because there was a contrasting news. And what we are seeing right now, especially in the last 2 hours, is the dollar index recovering against other currencies. And there's a good chance we could be continuing to see a dollar recovery towards the end of the day. So with this in mind, I remember discussing this during the markets snapshot in the morning, that this is the area to observe if you're looking to buy USD JPY, and that was along this trend line. So when the news happened, there was a huge break of this trend line. The market extended all the way down, but then left a very long tail towards the lower side, getting a rejection of lower prices. The following hour moved higher, then on the third hour completed the reversal, and this should have been the signal to go for a bullish position. So if whenever you see something like this, market moving downwards and then immediately reversing, then it should be an indication of a bullish entry. And now it seems more likely that the dollar will continue to rally against the end, and a very short-term target is just the previous high. So a target around this area of 150.866 is in order. But then from a daily chart perspective, we know that there's still more room for upside, and USD JPY could get to the previous high that we saw last year of 151.878. So in this case, there's a good chance to see some acceleration here. If you look at the Euro USD, the most traded currency pair, we're expecting to look for some shorts here. This did not happen. The market did not show any evidence of bearish entry. Then we started observing this area here. The market closed beyond that. Then it went all the way up. And then in the last 2 hours, or I would say 3 hours, we have seen this happen in the market where there was a big acceleration and then sellers entered strongly. So we could be seeing the dollar starting to recover, then prices now starting to back downwards. So if I was to remove everything on this chart just to make it cleaner, then you'd notice what basically happened with the Euro USD. So it seems like there's some form of strong resistance around this area. So if you ignore this one movement when the market attempted to go up and bust, then there's a couple of price points where the market was unable to break the area, and you can extend this all the way back, and you notice that this area has been pretty consistent. So in this case, acting as support, now turned into a resistance, resistance, resistance. And today, the market changed direction even before getting there. So this indicates that dollar bulls might be in control of this market and would be seeing the price moving back downwards. And a couple of key targets be on this bottom here, as well as this low that we saw yesterday. So there's a good likelihood we could be seeing price now moving downwards and heading towards this area and potentially all the way down. So it's a similar case, obviously. So yes, the pound USD made a big spike here, but did manage to reduce. So this big spike happened earlier during the news announcement, but now there seems to be some form of weakness. We don't have sufficient evidence of sellers entering this market, so we remain patient until we see some form of evidence coming in. So USD CAD, you can see the dollar being pretty weak against the Canadian dollar, but then there was already a sign of weakening trend. So the sign of the weakening trend is basically this pin bar here. And now as the market continues pushing lower, looking for more evidence of sellers entering the market. So after the pin bar, there was no confirmation. So we remain patient, sit on our hands until there's a clear-cut opportunity to position. So for now, it seems like the buyers is still bearish, basically meaning that the dollar continuing to lose against the Canadian dollar. So for gold, the expectation was that there is this trend line here. So if the market breaks, we were expecting to trade higher towards this area here. So the market really went up, but didn't quite get to the target. So now we wait and see if there will be an opportunity to go for a short selling position. And that is if we see evidence of sellers entering the market. So it's already beginning to shape up. So I think this is sufficient evidence that sellers are entering this market. And once the market reverses, the target will be the previous low. So we would be looking for a potential opportunity to go short and target even lower prices. So the idea is to go this way, track the last low that we saw yesterday. This was a 1984 price level, since the market has completely failed to move towards the upper side. So try and change this. I think the color is too strong. Sorry, a lighter shade of yellow. So in this case, you can see that the bullish momentum is already weak after we saw the long-legged doji here, then a reversal candlestick indicating what looks like an evening star. And now we expect the prices to continue going further back. The surprising market is the Nasdaq, which has shown some strong strength towards forming higher highs. This has been the story of the entire year. And if you compare the last 3 days, you notice that the market is already forming some form of trend line here. And with this trend line being formed here, then there's this expectation that the Nasdaq continues pushing higher. So we already covered this yesterday and mentioned that we're expecting this price all the way up. So notice the first time the market bounces here, the second time here. Then today, in the last 1 hour, we had a very strong rejection of lower prices along the same trend line, which is a confirmation that buyers are entering this market and we could be headed higher towards the 18,000 price level. So for the Dow, you can see the strong momentum that has continued here, hour over hour. And now the market is accelerating. So the idea is to see or to seek price continuing this rally and getting to this resistance and potentially extending it to the previous high and forming an all-time high. So from the 4-hour chart, this is how it looks like. From the daily, this is how it looks like. So there's still more room for upside momentum. So I know there are some guys that will have some questions about the shilling. So if I zoom this chart out and you look at this performance of the Nasdaq, sorry, of the Dow Jones, what has happened with the Kenya shilling is similar with what happened with the Dow Jones here. So a big drop from the prevailing trend. But then the recovery hasn't happened yet, and there's a good chance we'll be seeing the dollar starting to cover against the Kenya shilling. So for the US 500, also a similar story. So in this case, we have a key level trend line here that was acting as a resistance and now acting as support. So this was the resistance. Now it's acting as support. So we have seen the market break this trend line, move back to retest the area, and now further upwards. And the expectation is still the same, that the S&P 500 continues the recovery and eventually gets $5,048 per share. And that will basically mean another all-time high. So as for Brent oil, early this morning, we saw Brent oil moving lower. We knew that there was a very strong support area here. So as it continued moving downwards, we were looking for signs of price action around this price level of $80.35. So once the price got there, I noticed that there was a very strong rejection and an immediate formation of what we call a morning star. And since then, we have seen an almost straightforward rally in the Brent towards the previous high. So in this case, a very nice rally to $82.74 per barrel. So now you observe the price action around this area here. If there's more continued strength, then we continue trading higher. But then if the market fails at that point, then we start looking for shorts. But then it's more likely from a higher time frame perspective that the bullish momentum will continue. So there's a good chance we could be seeing $83.67 per barrel in the near future. And this could happen as soon as tomorrow or even early next week. So European equity indices are on the verge of breaking out and forming higher high. So we already discussed this in the morning snapshot session, but now it seems like this is the very moment that the market is breaking. And now it seems like we should be looking for more buy positions, targeting even higher prices. Remember, we don't have any resistance since the market is forming all-time highs, meaning that there is no higher price that the market has ever been. So we don't know how further the market might accelerate, but then we can estimate that maybe using something different. So for those who know the cup and a handle pattern, you can see the market moving downwards, going back up, forming the cup, down, then up. This completes the handle. And as a result, now we have a reversal pattern, a continuation pattern, and there's an expectation that we should be seeing even higher prices coming from this. So if you use this trend line as a target, as a way to target or set your stop take profit, then the idea is to look for an area where the market will interact with this resistance. This seems likely to be around 4,774. So price is likely to accelerate and get at least this gain. So the French 40 index has also broken out towards the upper side. So it has broken the resistance here. This is the high of the last couple of weeks. There was this trend line, it has also broken it, and now we are looking at another set of all-time highs. So in this case, there's a good chance we will be seeing much higher prices coming in from the French 40 index. So for the dollar against the Swiss franc, it seems like the market was really starting to accelerate downwards. But then from the price action we are seeing over the last couple of hours, there seems to be some support coming in the markets. And in this case, the dollar could start recovering against the Swiss franc after forming this reversal pattern. So now it's within expectations. The market running back upwards. So New Zealand USD made a very strong rally. Also, seems like a common pattern across board. Now you can see the dollar taking some of the losses back and regaining some pips against the New Zealand dollar. So some further continuation downwards is in order, perhaps towards the days open. And then for pound yen, the trend has continued to be bullish. So after this area served as a major support for the pound yen, notice how the price bounced quite strongly. So the price go to this area. I remember analyzing this during the snapshot. We found that this area was a pretty strong support. And immediately after that, you can see how price has responded by bouncing quite strongly. And I expect to see some further upside momentum from this, potentially hitting the previous high. So the previous high is all the way up. So we expect to see a price level of around 190.073 yen per GBP. So the Chinese yuan is also trading at a key level support. So in this case, there's some increasing signs of continuation of the bullish momentum. So a big spike, the market goes back down for 2 days. Now we're expecting yet another big spike, potentially towards the previous high. So in this case, I expect to see some further upside momentum. So another market covered last week was the Hong Kong or the Hang Seng 50 index. So after the big sell-off was the end of last week, we have seen recovery this week. Even though the market has been on a holiday as a result of the Chinese New Year, I expect to see some further upside momentum by coming in on the Hang Seng index. However, for the China A50 index, what we are seeing here is a market that made a very big acceleration last week. Then after it got to that high, started trading in the sideways momentum. So if you go to the 1 hour time frame, I would say this seems to be the flag that the market is forming. And perhaps at some point, maybe tomorrow or Monday next week, we should be expecting to see some breakout. So even though China is celebrating its new year, this flag will not hold forever. At some point, we will see the market either breaking up or lower. Then there's a good chance that the breakout will be on the upper side as the stocks continue to recover from the sell-off that they experienced over the last 2 years. So if you do a weekly chart, you notice, in fact, it's 3 years. So 2021, 2022, and 2023 were completely bearish. And now a lot of investors are buying this bottom, hoping that the Chinese stocks make a turnaround and start moving upwards this year. So one last asset is Bitcoin. So we covered this early in the day, and we saw that the market had formed a very nice pullback, which would likely be a good idea to go for bullish positions. So we have seen the market making an acceleration yesterday, but then today it has been more of a sideways momentum. So nothing much is happening on Bitcoin prices. So from here, it's more like the Bitcoin price is maintaining the 52,000 price level. And also it seems like at some point we'll be seeing some further breakout, as has been the case with Bitcoin throughout the better trading of the year. So in this case, I would be observing this range to see whether the market breaks the channel towards the upper side or whether it breaks the lower side. But then I'm more inclined to bet on the upper side, mainly as a result of the big momentum we are seeing here. So there is a good chance we'll be seeing some further upside momentum. And that would mean that we start thinking about the previous all-time high, which was slightly below $69,000. So as for the FTSE, we had this rejection of higher prices happening on this resistance and the market making big reversal. But then the price did not accelerate downwards. Somewhere in the afternoon after the New session started, these equity indices have found some form of strength. And now it seems like the idea is almost invalidated once the market gets to the previous high. So it seems like stocks have become extremely bullish this afternoon. And some of the best bets include the French 40 index, the Euro 50 cash index, the 700. We have seen the US 500 continuing, the Dow as well as the Nasdaq. So it seems like all these are likely candidates for bullish positions. And on the currency side, I think USD JPY takes it all. So for gold, you can see it's also struggling. It's not very promising to go for a short selling trade here. So I think the one that takes it all seems to be USD JPY. So that being said, some of the key highlights today as follows. US retail sales fall more than expected. So there was a big contraction in US retail sales data for January. British economy enters a recession. Covered this extensively on the morning sessions. For those who are joining for the first time, you should know that we have a daily session happening at 11 a.m. It's called the Market Snapshot. It's recorded live on YouTube, and you can find the recordings on the FX Pesa channel. So you just go to FX Pesa and then look at the various channels. So once you get to the website, you'll see the various videos that we've done in the past. So I'm trying to load this. Somehow it's taking some time. So just go to the FX Pesa channel and then click on the live section. Then from live, you'll see a record of previous sessions. So early in the day, the market snapshot did 8 hours ago. It was about 39 minutes in time. So this is where you'll be able to track down what we discussed in the session. A good question. Where is the sell the dollar trend gaining traction, and how will you respond to this? I think there's some form of market manipulation happening. If people decide and organizations decide to sell the dollar, they don't advertise it. So if you see a lot of advertisements being made, then you should understand that there is some form of market manipulation happening, and these things tend to correct themselves. So you don't have to do anything. If you have been holding dollars, just hold on to it. Fundamentals will take care of you, and the price will get back to where it was before. So unless something has fundamentally changed, I expect to see some more recovery. Hey, Tony Duck, and thank you for joining the session. Pound end today was lit. Yes, that was good, especially since the 11 a.m. Session. From J's Code, today was a good day. Could we be seeing a tech bubble? Yes, of course there is a tech bubble. Just don't know when it burst. So it's really tough to time the popping of a bubble. So if markets are very strong and moving in one direction, the higher they move, you should be continuing in that direction. Don't fight the storm, don't fight the trend. And the moment prices start changing direction, then you also change your positions. So the beauty about it for you as a forex trader, if prices are going up, you go up with them. And if things change, then now start selling and benefit from the other side. So last question is about UJ. I think we've already covered this. Yeah. So USD JPY is it's a clean buy, but this is not a recommendation. Should always do research and make your own conclusion as well as practice proper risk management. But then if you're just a beginner, you're on a demo account, this is an idea to go for. So it's pretty simple. Just go for a buy position, set your stop loss right here, just below this tail, and you take profit right here or even higher. You don't have to follow the previous high. If you learn from the previous movements, notice that this was a previous high, market dropped here, and then once it made the rally, didn't stop right here, kept pushing higher, pulled back and kept pushing all the way up. So in this case, if a similar move was playing out here, then there's a good chance that your target is not just here and that the price may be moving even higher based on the upper trend line, and the upper trend line is following this path here. So think along these lines for USD JPY trading. So Agustin, Koril, thank you. Thank you for your comment and your participation in the webinar. So that's it for the day. I know it has been a tough week. A lot of you guys have had the better sides of the trades, especially after the analysis. So enjoy the rest of your week. Tomorrow I will not be holding any session, but if you are somewhere within the environment of Kitengela, you should know that we have a Pips and Branch event on Saturday. It will be at the Kitengela Mall, third floor at the FX Pesa office. And it should be starting at 10 a.m. through to 1 p.m. So make sure to join in and participate, as well as network with other traders. So thank you very much, guys. See you then.